Just an important note that great investor Warren Buffett is not only hoarding a record amount of cash with Berkshire Hathaway, but now they're exiting the S&P 500 ETFs with Vanguard and with the spiders. They're exiting those positions. We're in a brand new bull market that's going to just keep going on for years and years. Well, why is he doing that? Why is he hoarding all that cash? Now, just quickly, this is the Buffett indicator. It's market cap to GDP. It's Warren Buffett's favorite indicator, so it's been dubbed the Buffett indicator. The S&P is in red. The Buffett indicator here is in blue. It just moved above 200%. It's still above 200%, but it just moved to the highest levels in history. Higher than when it was at the dot-com bubble, higher, back over here at the dot-com bubble, higher. Cap to GDP is higher than it was before the crash in 1929. We know when valuations get this high, over the next 10 years, you're going to have returns in the stock market extremely low or negative. That's what it tells us when valuations become this high. Oh, but there's no bubble. Now, this was a bubble, but up here, this is not a bubble. Absolutely incredible. This was a bubble over here, the run up in the 80s and the 90s, but this, that's not a bubble. Come on. We don't have bubbles anymore. The Fed won't let the market go down. Same thing they say at every single market top. Market cap to GDP is up over 200%. That's telling us the market is more overvalued than any other time in history. More overvalued than back in 1929. More overvalued here at the peak of the tech bubble. More overvalued here than at the financial crisis. And again, when we reached 150%, just under 150% right here with the Buffett indicator, again, the market had peaked. We sold off. We are going to have low returns in the market for the next decade. Shiller PE ratio said the same thing. Again, these are valuations. They're telling you the market is extremely overvalued. Tell you the day the market's going to top, but it tells you that the market is very overvalued. And here, again, we can see the recessions. And before recession starts, the overvalued market starts to turn down. Here, the market was also overvalued. Now, the market went back. The S&P went back and tested the high and went slightly higher. And again, remained overvalued, but again, diverged. There was a divergence between the Buffett indicator and the S&P 500, which moved slightly higher. But again, still overvalued, still over 100, and that's what Warren Buffett says, start paying attention when you get over 100. You can see it stay there for a while. We saw it stay there with the bursting of the tech bubble. We've seen it stay here in the birth of the new bull market after the collapse during the financial crisis. So again, we reached these levels, 200% here at the 2022 peak. We turned down, we dropped 27.5% on the S&P. Now we've turned back up, and again, we're seeing the S&P move to new highs. The market is more overvalued than any other time in history. Why in the world do you think Warren Buffett, if the bull market's going to keep going, why is he exiting? Oh, because the bull market, it's only 2 years old. Bear market, we already had it. The people that told us that the 2022 sell-off over here wasn't going to happen are the same people telling us, oh, we've already had the bear market. It's already done, and we're now in this new bull market that's going to go on for many, many years. The bear market's already behind us. That is the biggest bunch of poppycock I've ever heard in my life. The bull market never ended. We never dropped below the 50-month moving average. We never dropped below the 200-week moving average with those sell-offs and stayed there. We dropped down to those levels and bounced off of them. That was a major correction, kind of like what we had during the pandemic and in 2018, major corrections. Next one is going to be a major market top. When it's done here, that could be just weeks away. Get the final blow-off top here as we get the delay with the tariffs. I think we move to new highs. We're going to top out. When we top, nobody's going to think it's a top. It's like the complacency at the January high, the complacency at the December high, the complacency at the July high, the complacency back at the 2022 high. Then you're going to get a market inflation freakout happening in all likelihood. We're seeing the signals that are going to produce a market top. The bursting of the AI bubble. We've seen what happened with the DeepSeek sell-off. We were told there's no possible way that could happen, and yet it did. And we saw Nvidia get that 17% decline in one day. It dropped over 18% at the lows of the session in one day. We're going to have earnings here in a few days on the 25th, in about a week and a half from now. What's going to happen is this is going to come down to nosebleed levels, and the market's going to drop, and it's probably going to go back and test this low over here at the pandemic low, take out the 2022 low, go down towards the pandemic low, and either move just below it or move, if we get something bigger, go back to these highs from the previous bull market highs. Again, I've talked about both of those scenarios. I have people saying the same thing that they did at the dot-com bubble. Oh, the Fed won't let that happen. It's the Fed policies that are going to end up causing the crash. The Fed gave us the inflation. They can make excuses and blame all these other things. It's them. It's not tariffs. It's not all the finger pointing they do. It is them. They caused the inflation. QE, other operations are all inflationary. Many of their policies and the government. $2.2 trillion running a deficit of $2.2 trillion in government deficit spending in 2024 ahead of the election. That artificially propped the economy up, but it's going to give us the inflation. That's why the inflation is going to surge, but it'll be blamed on tariffs. And that's why I say you're going to get an inflation freakout. People running around with their hair on fire all concerned about tariffs causing inflation. They weren't concerned about the real cause of the Fed's policies and the massive government deficit spending we had before the election. They weren't concerned about that. That's where you're going to get your inflation. I continue to predict it's going higher because I'm watching what's happening. You got the media out there already blaming tariffs on the high inflation. It's not even reflected in the inflation reports that we just got. It's already ticking up. But the tariffs will be blamed for the inflation going back up. The media is running a disinformation campaign trying to convince us that there's a trade war going on, which we don't have yet. Everything's been paused or delayed, for the most part. We got the China tariffs. We had the China's tariffs before, in 2018 and 19, and they stayed. And the inflation rate went down. The tariffs ended on Mexico and Canada in 2019. They stayed on China, and inflation went down more. We had a drop in 2020 with the pandemic. Why didn't the Chinese tariffs? Why didn't they cause inflation to just soar? It's a bunch of nonsense. That's why. But I promise you, the media is going to be successful in the coming weeks ahead of causing the investors and traders' heads to explode, believing that we're entering a trade war and inflation is about to soar back to 9%. I mean, these people are going to play it up. I'm telling you, inflation is going to go higher, but eventually we're going to have a deflationary bust, just like in 2007. 2007, the Fed was slashing rates, and yet they were all concerned about inflation going higher, telling us we weren't going to have a recession. Well, evidence of the recession started showing up, and the Fed panicked. Slash rates and did jumbo cuts, and even though inflation continued to soar higher, months later, the deflationary forces dealt with the inflation. Well, I'm telling you, nobody believes the Fed's going to cut right now. I'm telling you, they're going to cut, and they're going to cut aggressively because we're about to have a recession that they're telling us that we're not going to have. And why in the world do you think Warren Buffett is selling the S&P ETFs if they're in this so-called new bull market that we're being told? Just food for thought, huh? People on more social media telling us, we're going to have another bull market. We're having the bull market here, and it's only 2 years in the bull market, and it's going to keep going for another, 7 years. Do you think that Warren Buffett is stupid? Do you think he's a dope? I don't. I think he's a brilliant man. Why would he do that? Holding such a large cash position, because he knows his favorite indicator is at extremes approaching a market top. That's why he's doing it. Please support the channel with the link directly below that allows me to be able to provide you this information. Most channels have sponsors. I don't choose to do that. I just show you the charts that I look at every day and ask that you partner with me and support the channel so I don't have to waste time selling you stuff. But I need to hear from you in order to make that work. If you could take a moment to step up to the plate and help out, I would really, really appreciate it. It'd really be encouraging to hear from you. Like the charts, you like the indicators, let me know that by supporting the channel. Follow the link below. It will take you to a secured site. You can donate any amount you want. You can make it a recurring donation. If you do that, I thank you. But just follow the link below. It'll just take a moment and help out today. I thank you for your consideration for that. Look, warned you we were going to bounce off that January trend line, the 2023 trend line. Warned you about that. We slightly violated it. We bounced. Told you we were going to rally, and then I told you we were going to pull back. All that happened now. All right, now with this choppiness, it's just short-term price fluctuations. The main movement is we're still going higher. Don't lose sight of the main movement. And then once we get up there, the upper channel line and the upper boundary of the rising wedge, we're going to see the S&P top out. And you're going to see an inflation freak out. We're going to drop 20%, and then we're going to have the Fed panic. And then we're going to see emergency cuts, and the market will rally on the emergency cuts back towards probably the 78.6 Fibonacci, and then the bottom's going to fall to the stock market. It did in 2001 like it did in 2008. What I'm saying is don't lose sight of the big picture. We're still going higher. We have these short-term price fluctuations on pullbacks, a December pullback, January low, and then the January to February pullback, and we're still getting choppiness, but we're likely in minor wave 5 and going higher. Talk more about the short-term price fluctuations on the 60-minute chart. Still see another pullback, but we're going higher. Don't lose sight of the big picture. Now, we got a lot of bad news this week. A lot of bad news. One glimmer of hope that the new tariffs, the reciprocal tariffs, are going to be delayed for a little while. That's the glimmer of hope. Markets tend to bottom on bad news, and this very well could be confirming a bottom now with our higher low above the January lows we've been talking about and looking for. A week off. We heard before Monday, last Monday, that the steel and aluminum tariffs were coming. On Monday, after the stock market closed, the president signed an executive order implementing new tariffs on aluminum and steel. So that's how we started the week off. We had Powell's two-day testimony. Now, again, remained hawkish, but he downplayed his questions about the tariffs, talked about how that they're in a good place to respond to inflation if need be. Really downplayed his questions about the tariffs and reserved judgment. As he said, we don't know how high the tariffs will be. We don't know who they'll be on. Many unknowns, so he really dodged those questions. So the market like that, by the way, Powell got credit. Senator thanked him for his leadership in preventing the recession. Well, Powell took the compliment, by the way. Remember, Powell told us the December FOMC press conference, it's clear we've avoided a recession. So again, Powell being thanked and patted on the back for giving us a soft landing, and that's what the senator said. It was Senator Kennedy. Is he going to be surprised when the recession shows up here in 2025? Nevertheless, I digress. The CPI inflation, it jumped to the highest amount on a month-over-month basis in a year and a half, since August of 2023. This rose by 5.5% January, and the headline number, inflation rose to 3%. Really bad news. We saw the market gap down on this and then recover, fill the gap, and then continue the rally, the PPI, and delay with the tariffs there on Thursday. PPI is rising. It's risen now. Headline number 3%, 3.3% with the core. We got hot inflation with the CPI. We got hot inflation with the PPI. Predicting that this would happen, we know that there has been a sharp increase in the money supply that's eventually going to spill over the inflation data. Not the tariffs, as we're being told by the media, the tariffs aren't even being implemented. You know, Trump's only been president for 3.5 weeks. We only got the tariffs announced there, steel and aluminum, on Monday. 2 days ago, we got the China tariffs at 10%. Mexico's tariffs have been paused. He's trying to tell us we're going to have this trade war now, and this is going to be all the fear-mongering that gives us the top. We're going to have all this inflation now. building this momentum, and we're going to see an inflation freakout, as I've been warning. I've been warning about this long before this inflation report, and that's why I've been predicting it's going to rise back up. All you got to do is look at the M2 money supply to know it's going to go back up. The media is going to work everybody up into a tizzy. They're going to work everybody up into a tizzy to become confused and to be all fearful and have all this fear mongering. What's going to give us a blow off top when we get it, and it's going to give us a fast 20% drop. I hear so many stories about tariffs and inflation in the next 4 to 8 weeks here. Tariffs, they might the new tariffs that we're going to get, they might take 6 to 8 weeks to implement to begin. Get the blow off top, and then we're going to get the inflation freak out a few weeks from now. But this could drag out 6 or 8 weeks or so, 6, 7, 8 weeks, maybe, just 6 weeks or so into early April. But on Wednesday, we got that CPI. Nevertheless, I digress again. That CPI, and it came in hot. The market gapped down and then rebounded. Then we got the PPI. PPI came in horrible, too. They both came in hot. I covered that in Wednesday and Thursday's update. Through the inflation data, they came in hot. That's the story. What I've been predicting was going to happen. My inflation freak-out narrative, I think, is likely going to be the case. Now we get this bad news, and the market rallies, and then we get the anticipation for Trump's reciprocal tariffs, and it comes in. We didn't know if the new tariffs would be implemented immediately or if they would be delayed. When the president announced the tariffs on Canada and Mexico, they were delayed until February 1st, and then they were in play for, a day and a half, 2 days, whatever it was, and then they were paused as Trump got concessions out of Canada and Mexico. Didn't know what the White House was going to do, if they were going to bring them about immediately or not, and the market celebrated and breathed a sigh of relief, anyways, that there is a delay on Trump's new tariffs. We got a relief rally for that. And again, we're going to get this final climax move higher, complete the blow off top, and then all the stuff's going to come into play. Market is going to have an inflation freak out. And again, I've been predicting this long before we got the inflation data and these tariffs. The media is trying to tell us, the inflation's ticking up. The tariffs aren't even reflected in this data yet. They're going to get blamed. It's not causing the inflation. It's the Fed and the government that's causing the inflation. I'm telling you, the inflation reports are going to go higher. The data is going to go higher because an increase in the money supply, and we just saw before the election $2.2 trillion in deficit spending take place. That's inflationary. Artificially prop up the economy so we didn't get the recession immediately. Now we're going to get it. A crazy, crazy week. So we have the market rallying up on bad news, relief rally, plugging off the inflation data, very, very hot inflation data reports, focusing on that there is going to be a delay with the reciprocal tariffs. The 10-year yield soar after the CPI inflation data, and then it came down with the PPI and the delay for the tariffs. I talked about a counter trend. Likely just happened here. 10-year declining. New tariffs are delayed. Dollar was down for the week. The dollar has turned down, breaking out. Warning about this was giving us the final blow off top on the S&P as the dollar pulls back. Dollar turning down for the week as the tariffs are delayed. Top the week off with retail sales slumping. Now, I think that the delay of the tariffs now opens the door to complete the blow off top for the S&P 500, and I think that we're now going to see the pullback here with the dollar. We've seen now in the monthly time frame the turn back down. I think the dollar will drop, and then eventually it will go higher up towards this trend line here that I've drawn parallel to the lower boundary. And again, the dollar has a negative correlation with the market. It has a negative correlation with Bitcoin. This opens the door for the blow off top. We move to try to backtest a breakout of this trend line right here in the monthly time frame. Massive diversions will eventually develop on the dollar, and again, it will peak before the market bottoms Bounced off the 200-week moving average here and the 50-month moving average that we just looked at. And again, it's throwing back now. And again, that opens a door, one more push higher for the stock market and for Bitcoin. It broke this trend line, but it bounced off the 200-week moving average and major horizontal support with this bullish divergence right here on the RSI. Stock market tanked in 2022. The dollar had broke out, back tested, and the dollar soared, and the market tanked. It was a major correction in the stock market. This time it will likely produce a top, but we've now broken these two trend lines as we've broken the previous two trend lines. Can't see the other one on this chart, but there are two. And again, broke overhead support. We broke overhead support. We're pulling back, and again, headed for a topping process. But I think this opens the door to resume the advance. Dollar MACD in positive territory, but starting to roll over here to get a bearish cross. We saw that jump with the 10-year, with the CPI data. We turned back down on the tariffs being delayed. With a boatload of bad news this week, the stock market squeaked out a gain. The S&P was up nearly 1.5% for the week, up 88.5 points higher. Monday, we got the new tariffs on steel and aluminum being announced. Powell continued to be cautious with his testimony before Congress. Then we got hot inflation data with the CPI and the PPI. Got more tariffs. We got those reciprocal tariffs, but the glimmer of hope is they're going to now be delayed for a while. Likely going to give us a blow off top, but the S&P squeaked out another game. We bounced last week. I talked about this. We bounced off the 20-week moving average. I told you if we went back and tested the trend line, we might try to take out that low from the previous week. We did not. It pulled back, and we got a rising wedge, and we pulled back. So far, it's given us another higher low. About both of those scenarios. Again, back in January, at the January low, I predicted we were going to bounce off this trend line. January 9th and 10th, I told you the following week we would do that. We did that the following day at the start of the week on January 13th. Again, I believe we're in minor wave 5. I believe we're getting these 5 subwaves higher, and we're headed up into this area. Maybe that's into the 6340 or 50 area, maybe 6400 if we take our time getting there. Again, could be just a few weeks. We see a surge, a big surge in the market, or do it over time. February, March, possibly even April, then again, we'll reach that level at higher levels. The trend lines are my target. The upper boundary of the rising wedge right here, the black rising wedge outlined in black, and the blue upper boundary of the channel where they intersect is likely where we are headed. Get there, people aren't going to go, oh, gee, it tops in. They're going to be selling plans like Warren Buffett is. They're going to be going, oh, no. Market's just getting started. The market will likely peak and we'll have a 20% drop, and it's going to be an inflation freakout and the bursting of the AI bubble that does it. We now see what the catalyst is likely going to be. Most people don't recognize that, but paying attention, that's it. Talking about the bursting of the AI bubble. I've been talking about the inflation freakout. We're going to go higher. Those things will create a market top. We're going to see this 20% drop. And right here, the Fed's going to panic when we move back to this trend line. And the Fed's going to panic, and they're going to do an emergency cut. The market's going to celebrate. Oh, rate cuts are here, finally. Everything's okay. The Fed is here to save the day, and it's going to be like 2020 all over again. The Fed's going to cut. They're going to give us QE, and the Fed won't let the market drop. And we're going to get a bounce. And we'll probably go back up to like the 61.8 fib, 78.6 Fibonacci up the decline. Then after that, the bottom is going to fall out of the stock market. Again, we're forming this multiple point negative divergence on the RSI and the MACD. I think we get one more reference point, very much like what we had over here in the MACD, where again, this long topping process, and that's what I think we have right here with this channel and this rising wedge going into the upper end of the channel. And so I think that's where we're headed. I told you, again, reached the trend line back in November and December and January. We went sideways. We have this long, since the November rally there, we have this long sideways move, and that has bought the market more time. And that has formed this trend line with the July peak reaching the November and the December top, and this is likely pointing to the top, and that is coming up here. And again, that's in the not too distant future. Reach that trend line immediately, or we could take our time reaching it. A good shot, you're going to reach it probably in March or April, because in November, December, and January, and now February, we haven't reached it. On sideways, and we've got that larger wave 4 for minor wave 4. If that was shorter, we could have reached it earlier, but we didn't. I mean, wave 2 was shorter, and now I think we have again an extended wave 5. It's going to complete this minor wave 5 right here. It's going to complete the 5-leg push from the wave 4 right here, which was the August low. This 5 minor waves here. And that will complete the minor wave, or I'm sorry, the intermediate wave 5. That's intermediate wave 4. These 5 minor waves, this is intermediate wave 5, and that will complete the 5-leg push higher here, the intermediate waves, and the whole thing makes primary wave 5. They're circled. Primary wave 4 here, primary wave 3 here, and that's going to produce your top. Now here's the S&P 500 daily chart. I've talked about 2 scenarios. I talked about this wave 2 right here, which is probably done with the back test. I told you over here, hey, we're going to bottom. I told you on January 9th and 10th, we're going to bottom the following week. We bottomed on Monday the 13th at the trend line of support. This is the 2023 trend line going all the way back. I only have it here from August, but it goes all the way back. 2023 low. Everybody said, no, we have a head and shoulders, we're all gonna die. And I told you it's a fake, phony pattern, because I told you this is minor wave 4. Okay? Bird got very bearish. They weren't bearish up here at the December top, but boy, they were bearish down here. The week ahead of the bottom and the week of the bottom, they were extremely bearish. The bottom was developing that week. We were going to get an inauguration day rally and have a continuation of the election rally that was over here. That happened. Right up into, we broke out ahead of inauguration day, rallied up, and then I told you, hey, up here we're gonna get a pullback, and we're gonna back test the bull flag. Bird that got very bearish here said, no, we're gonna keep going. And what happened? We pulled back. We had the deep seek sell-off. Oh, we were told that there's nothing taking AI down, and yet NVIDIA drops 18% at the lows of that session, closing 17% lower in one day with that drop. Major technical damage. Talk about NVIDIA over the weekend. I told you we were getting wave 1 completed, the first subwave of minor wave 5, and we're getting wave 2. And I predicted both of those correctly. I told you with the deep six sell-off, we rallied back up, we formed a bear flag. I told you we were going to come down and lower. What happened? We did. Now here I told you I'm not sure. I'm not sure if this is done, because it could have been a larger complex corrective move, or it could be done and we just get a higher low, not a lower low. But I told you if we got a lower low, we'd hit this trend line one more time if it ended up being a larger corrective move. But I nailed the prediction of the pullback, and even right here, let me show you on the 60-minute chart. But before I do, I just want to show you again, we're going up to this July trend line, the rising wedge. That's eventually where we're headed. Even if we have a little bit more volatility next week, we're headed up here. Got to get a major top. And when we do, complacency is going to be so high, we're going to get the inflation freak out surrounding the tariffs, surrounding the inflation data continuing to rise. It will freak out, drop, and then the Fed will freak out and panic. That's what's going to happen. That's what happened in 2007 and 8. That's what happened in 2001. We got emergency cuts out of the Fed because they panicked and didn't see the recession was about to happen. Now we got a candle of indecision. I'll show you that 60-minute chart in a moment. We got a candle of indecision in the daily time frame at the resistance area here, the resistance zone. Here's a deep seek sell-off. Here's the tariff sell-off with Canada and Mexico. Here's the new tariffs with steel and aluminum. There's about more coming tariffs, and then the relief rally on Thursday. The reciprocal tariffs are going to be delayed. So now we get a doji, a candle of indecision. Is it a continuation pattern, or is it a reversal pattern where we still have more work to be done here? Now, I warned you that when we got the deep seek sell-off, we formed this bear flag, we were going to still make a new low down over here. And we did. We back tested the bull flag as I predicted we would. That was correct. I told you we'd come back and fill this gap at 59.38. That was correct. Intraday signals turned bullish and we got this rally. And we formed a rising wedge. We had a bear flag over here, a big rising wedge here, but we had a bear flag here and then this smaller rising wedge. And I told you, as we were filling the gap over here, we filled the deep seat gap at 6101. Over here, we filled the gap already at 6,040 with our tariff sell-off to the new low. And I told you we were forming a rising wedge. I told you we are going to come back and test this low. And I told you I did not know if we were going to get a higher low or a lower low. If we got more of a complex correction or drawn out correction, then we could have gotten a lower low. Being a higher low. We broke down from the rising wedge. We got a throwback. And I told you it's a throwback. We're still going lower. Come back and get a higher low or a lower low. We got the gap down with the CPI. That gave us a lower low. That gave us a higher low above this level. That horrible inflation news, the announcement of new tariffs with aluminum steel this week, and more tariffs coming, and yet the market shrugged it off. So again, going to be watching this now, but again, we likely now have a higher low. Have a couple of scenarios. Let me just say this again. Told you. Minor wave 4, it was completing over here, and that a major bottom was forming right here that was going to take us higher. These are just short-term price fluctuations, okay? I told you, main movement is higher. But I've made some amazing calls with these signals. Tell you we're going to go lower. Gee. Whoops, wrong one. Gee, we did. We took out that previous low. We got a throwback, and we actually went lower. Now, the S&P is becoming overbought again, and I think there's really two possibilities. And I think we completed minor wave 4 here. This is the 60-minute chart of the S&P. I think we've got our first wave right here, our subwave of wave 5, minor wave 5. I think you're likely completed the ABC move for second subwave of minor wave 5. Rising wedge, we broke down. We had the throwback, but then we came down, got a lower low, and got the higher low above our 200 period, just above our 200 period moving average. Risen back up to test the highs here. So I think that if we've completed the first subwave here, I think we have these microwaves here going on for wave 3, for a subwave 3 here, which is minute wave 3, a subwave. The two possibilities that the second subwave finished right here, and we've now started this wave 3 with these microwaves, and here's wave 1, and you got an A, B, C, and wave 2 completes here with this sell-off with the CPI low, okay? And that completed the first and second microwaves of wave 3, and we're now going into the extended third wave. The microwave, the extended microwave of the subwave, third subwave, or minute wave 3, the larger 5-leg push higher for minor wave 5. You're picking up what I'm throwing down. The other possibility is that, okay, we've completed the ABC for our second subwave right here, and that the first microwave right here is not done, okay? And that we got this wave 1, we got an ABC, but rather than the two being done there, completing an ABC move, that's not it. It's A, and then we're now getting B, and we're now about to get C, and that will complete the wave 2 somewhere else. A microwave. Don't get this mixed up. This wave 2 mixed up with our second subwave over here. These are just smaller waves in the construction of our third wave. That's assuming the third wave started. I had somebody tell me today that they still don't believe that our second subwave is done yet. That's possible, but I think unlikely. I think it's more likely that the first microwave may not be done yet. Could be a larger A, B, C move. We'll see. But again, if there's more volatility going into next week, we're going to have a short trading week. Monday will be closed for President's Day. Have more volatility next week. You know, over the weekend, there's supposed to be, the president has a deadline, release of the hostages. They're refusing to do it. That give us some volatility. Sometimes it's geopolitical issues they do. Who knows? Maybe it's something else. Earnings or economic data. Who knows? Get a pullback, I'll be watching closely. Now, if again the microwave 2 is done here, then we may just get a pullback and get a higher low and go on our way. But again, just got to be watching. Is this done here? Regardless, listen to me. I'm not interested in the short-term price fluctuations. I'm interested in the main movement. The main movement is higher from our bounce off of the 2023 trend line, going higher. Trend lines that I've been talking about. I think those are the possibilities. It's likely that we bottomed right here and we got that higher low I was looking for here, just above our 200 period moving average. So we'll be watching. And if we don't, again, this is another possibility. I think that this pullback here for subwave 2 is likely done. Got a lot of choppiness in here.